Okay, everyone. Now, are tech stocks a bubble? Many people are saying that the Nasdaq has outperformed the S&P 500 and the Dow Jones for years now, and a lot of people are especially worried about certain stocks like Tesla and many other stocks. So I'm going to ask the very simple question now: are we back to 1999? I would say, in general, the answer is no. However, it depends on the individual stocks. Now, what do I mean by that? The P to E, price to earnings ratios on the Nasdaq are nowhere near like they were in 1999. S&P 500 and also the other markets are not even close to 1999. However, it is true that in general, the Nasdaq, the price to earnings ratio is on paper more overvalued than the S&P 500 or the Dow Jones. I think the Dow Jones or the S&P 500 are not overvalued. The Nasdaq maybe, you could say maybe slightly, but in general, what we see is a difference between different stocks. Now, what do I mean by that? A company like Amazon or Apple or even Netflix. Now, I'm not saying that they are going to keep going up. I'm not saying they're going to go up or they're going to go down. I've said loads of times, nobody can predict these things for sure. If they could, stock picking would beat the market, and usually it doesn't, right? But what I would say is this: these companies, of course, make a hell of a lot of money when it comes to revenue and profit. In other words, you might say that's obvious, but actually some of the stocks we're talking about are not in the same category. For example, Tesla and Uber are still paying for their own revenue. Even Elon Musk has admitted that Tesla can't be profitable in many situations. Same with Uber. Uber are still actually making a loss. So a lot of investors who are buying that stock are kind of hoping that the new technologies for, like, I don't know, the driverless cars will come through or whatever, but that's a speculation, right? Whereas whatever you think about Apple and Amazon and Netflix now, it's a fact that they are making a lot of money, right? Whether or not the stock's overvalued or undervalued, they're making a lot of money, number one. Number two, in the case of Amazon, they've almost becoming a monopoly, so they're likely to keep making a lot of money. Number three, as more and more is going into index funds, that will actually help those 3 or 4 main stocks at the top of the market. Again, that doesn't mean they're going to go up forever, but that's very different to something like a Tesla or an Uber. I mean, I can remember in 1999, there was loads of big names that these days, many of the younger viewers wouldn't have even heard of, things like Blockbuster or whatever. But what you've always got to remember is this: business earnings are king. In other words, in the short term, anything can go up or down. For example, if a pharmaceutical or healthcare company announced tomorrow that they have invented a breakthrough for cancer, their stock might go up by 5,000, 10,000, 15,000%. It could skyrocket because, let's face it, if something like that was invented, it would increase global GDP by trillions. However, if that company was not able to monetize that stock, that new invention for the long term, eventually business earnings, and now as business earnings, imagine this analogy. You've got a dog and an owner. A dog can go in front of the owner for so long, but eventually it has to be pulled back, right? And when it comes to businesses, business earnings are the master and everything else is not the master. In other words, stories and liking a CEO like Elon Musk or whatever is all irrelevant long-term to business earnings. It always gets pulled back to some kind of value, which is actually some kind of intrinsic value. So things like Uber and Tesla, you know what? They might find a way to become profitable in 5 or 10 or more years, but that's a speculation. But what we do know is if they remain unprofitable for years, sooner or later, the stock would have to, you would think, go down, just like Coca-Cola. In the late 80s, the price to earnings ratio was crazy. Then it got pulled back. Same thing with some of the tech stocks in the late 90s. It got pulled back. So eventually, the fundamentals will play out. And that's the same with indexes, by the way. For example, the UK index or even some emerging market indexes like China and some others are more undervalued compared to some other markets. But sooner or later, that will change. So remember, when it comes to any investment, whether that's an individual stock or an index, business earnings and things like price to earnings ratios eventually come back into sync.